Good morning, everybody. Hope everyone is doing wonderfully well as we get started on this Wednesday morning. And of course, every morning recently, there's been no shortage of volatility in the markets. Today, the markets are ripping higher. We're going to go over the reasons for that, as well as a lot of earnings coming out, including Disney, Lyft, Airbnb, a lot of big moves in the earnings sectors. And SMCI, I didn't even mention that one, but that one is a major dropper on the charts. We talked about that one being a major player for the AI chips, and it is, but thank goodness Japan bailed us out overnight. And I'm going to go into that right now. So let's jump into the charts here, guys, and see exactly what we have. This is the Nikkei 225 index. Notice that yesterday we opened lower. This is last night, my time. We opened lower and then we rallied up and actually had a green day. Now, the kicker today, going into today, was what the Bank of Japan said. The Bank of Japan said that they would no longer hike rates while we were seeing this type of crisis in the markets. All right. So, again, all of a sudden, you have a central bank taking rate cuts or rate hikes, make that off the table. And I want to make this clear, guys. This is so important. So, you have a scenario where Japan has had this super lenient monetary policy, like, record lenient monetary policy for 40 years, essentially. And they start inching rates up just a fraction. The market throws a hissy fit and they back off right away. That's incredible. And it speaks to what I've been fearing will be the global scenario over the next, let's say, 5 to 10 years. And that's going to be where you see the Federal Reserve banks around the world needing to raise rates. They might do it a little bit, then the markets will freak out because this is a house of cards. It is a house of cards. And unfortunately, there's no way to get out of this without causing a massive collapse and probably something a la 1929 to 1930 Great Depression type scenario. So again, they can play around, they can pull back on rate cuts, you'll get bounces, but ultimately the problem is that the markets and the Fed appears willing to bend to the will of the markets. All right. So here we have again the Nikkei with a bounce overnight that helped the S&P futures. If we flip to the S&P futures, this is where we were trading yesterday into 8 p.m. Eastern time. This is where we opened at 4 in the morning on the SPY. You can see the markets just kept going higher and higher and then really just chopping over the last couple hours as we head into the open. All right, so we have a market that is rallying. One of the things that I will be watching, this is the daily chart now, is if we continue to rally, watch the scene of the crime retrace. What's the scene of the crime? Well, you basically have a very crystal clear trend break, right? So very clear, this low to these lows here, here, and then we broke down. So in general, what we should expect as investors is if we get a rally and it's a continual rally, the markets could go back to retest that level. All right, let's zoom in on that. Once we get back in that mix, this would be the scene of the crime. It's going to be major resistance, and you would expect the next leg lower to come in off of that point. Now, listen, there's no guarantees we get back to the scene of the crime, but for me, if we get back there, I will start shorting heavily. All right, needless to say, I was short heavily going into this downturn. I've covered a decent amount of the shorts, still have some of the shorts out there because I do ultimately think we're going to go lower, but I did want to take some profits on a lot of those positions and even have some longs here. I've talked about being long some of these semiconductor stocks, not SMCI though, mind you, but Micron. Micron's one that I continue to like. And this actually, look at this level of technical support on Micron, right into this level here. Look at all this support right along here. And again, what's interesting is yesterday we closed at 89. Just a little bit ago, Micron must have had some news. I haven't seen the news yet, but Micron ripped up and traded as high as about $94 here. Will be interesting to see the price action when the market opens if it continues to go up. In general, where would you expect Micron to go? Well, a couple levels, right? So we know that this is technical, was support, it broke. So that's going to be resistance, but you also have to respect this gap fill right here. So gap fill at 101, I would expect first target to be 101. And then if it continues up, maybe it gets back to about 107 to 108. All right. So that's where we stand on that front. The NASDAQ 100 is also in rally mode today. If we go to the intraday 10-minute chart, you can see, again, a big move up. Watch this level here. So this is yesterday's high on the NASDAQ 100. Can the markets get above that high? If they can, that would be bullish. That likely would tell us that we're making short-term higher highs. and maybe the markets can continue up in the near term. If they can't, I would be a little bit nervous. But again, with the Japanese central bank, the Bank of Japan, staying pat now on interest rates, it kind of gives an all clear sign for potential money flow to come back in the markets until we get some bad news. All right. Speaking of bad news, SMCI reported earnings yesterday after the bell. Do you guys remember in yesterday's game plan, this was your resistance line that I drew in? This is the exact line that I had in the video of in the game plan yesterday, in the live game plan. It was right around 716, 717, 715, right? Well, guess what? If we flip over to the 10-minute chart, look at what happened yesterday. SMCI reported earnings. Initially, they reported a 10-for-1 stock split. The stock ripped up, went right to the level, even pierced the level here, and then collapsed. And we talked about in yesterday's game plan, where would there be a good short if it pops into resistance? And it was right here. And holy cow, what a short that would have been, folks. Amazing. A drop from that level, 715 to 525 low in the pre-market here. Almost a $200 drop off of that technical level. That's remarkable. All right. So again, where now, what do we look at on the downside? Well, I had this line in yesterday in case it dumped. I said this would be your key technical level. The level here is a gap fill, and it's a little bit of a consolidation area here. This would only be short-term support, but possibly a good day trade today at 495 to 493. So if we flush through 500, there might be a technical bounce in store. Now, where would this become a longer-term buying opportunity? The answer is just look over here, right? So if we look at, see all this consolidation zone. So if we came down to, let's say, and this probably seems ridiculous that it could go this low, but when it was trading at 1200, people laughed at me when I said it would go back to $500. And here it is. I mean, again, everything I've talked about on this chart has come to pass, right? So we had the head and shoulders pattern, right? So this is so super, super remarkable. So here's your head and shoulders. And if you've been following these game plans, we talked about, okay, you can calculate the target of the head and shoulders pattern. Well, how do you calculate it? Well, you take the high of the head right here, you drop a plumb line straight down to the neckline. The neckline is the dotted line that kind of is the arm, connects the armpits essentially. So you essentially take that distance, and when it breaks the neckline, you do a measurement out and you take that same distance down. Well, guess what? It brings us right down into this 500-ish to 515 level, very close to this technical support. In fact, we've already kissed it pre-market at 525. That's the target. All right, really remarkable how, this is why the Winning Trader series is bar none the best out there, because it's actual easy to use techniques that work. And I think that's what we all want, right? I mean, I don't want to learn some crazy mathematical calculations. Just give me something simple. Here's a head and shoulders. Let's calculate when it breaks the neckline, what would be the target? Boom, boom, boom. And here pre-market, we're basically kissing it on that chart. So pretty cool stuff there on SMCI. They did report again earnings yesterday after the bell. The main concern with SMCI was their margins. Margins are falling. And by the way, folks, this is another prediction that I have made that is now starting to come to pass. And it's not even fully even near completion yet. But what was my one thing of why I said NVIDIA is going to fall way far back down? I said SMCI, all of these semiconductors were going to come down because competition, everyone's going to start making the same chips. And in the beginning, NVIDIA has the best chips, and they still have the best chips. But over time, other companies will have chips that rival the NVIDIA chips. And essentially what it does is it creates a product that's commoditized. And what it means is that because there's so many options, price will be driven down. Essentially, margins will be driven down. And one thing I said was that there's no way NVIDIA is going to maintain 77% margins. Like, think about that. 77% margins, not going to happen. And so eventually you're going to go back to margins in the 10% to 20% range. And then how do you justify valuations on some of these stocks where they were? Now, listen, Micron's already down almost 50% off of its highs. It's actually reasonably priced now based on a PE ratio going forward. I still think eventually it's going lower, though, but needless to say, good bounce on that here. All right. So let's get back into some of these other ones. Airbnb getting crushed on earnings. What was the catalyst here for the drop? The answer is very simple: consumer spending. This is something that in these game plans I've highlighted to you guys over and over and over again, that consumers are pulling back on spending. You can already see it. We saw it for the last 6 months. I was reporting that so many of these retailers were starting to talk about that. We saw McDonald's even saying that people that make under 50,000 can't even afford to go to McDonald's anymore. All right, consumers are hurting, and Airbnb is now confirming that. Now, where would a level on Airbnb be? We're trading right around the 112. We did get, and you have to take this into account, we got as low as 108. So I had a level yesterday that I talked about in the Trading the Closed show that was around 112, 113. But because we've already been lower than that pre-market, it is no longer a level. By the way, where was that level? It was right in here. So what we do is we go to the next level below. The next level on a technical basis is right here at 103. So 103 will be our key level of support, 103 to 104. If it gets through there, there's actually additional support right here as well at about 100 even number. So this would be, again, is this a swing trade? Is this a long-term investment? Neither. To be honest, this would be a day trade for me. There's no way I'm stepping up in front of this unless it maybe gets to double bottom down around $82. You give me 82 on Airbnb, I'd consider doing a swing trade. Not a long-term investment, though. I'm telling you guys, by the way, this is another prediction that I made six months ago that is going to come to fruition, in my opinion. Let's go into it. I said that the housing market was going to see extra downside because of Airbnb. Why? Well, essentially what you have, and this is now starting to play out, and Airbnb's even saying it, is that people were buying Airbnbs up, like 2, 3 different Airbnbs, even 4 and 5, because they could rent those out and pay the mortgages on those Airbnbs. Just so they basically didn't even put money down. They would just be paying the mortgage because from the profits they were making on the Airbnbs. When those Airbnbs don't rent anymore, do we really think those people are going to pay 3, 4, 5 mortgages? Not even close. And so what's going to happen is people will stop paying for those and they will go into foreclosure, and it will put more pressure on the housing market. All right. So the housing market, again, I would expect it to continue to go lower. And Airbnb is basically giving us one avenue why that's going to happen. What's another avenue? Well, as unemployment rises, there'll be more and more foreclosures as well. In that respect, more and more inventory is already hitting the markets. Florida, Texas, we're seeing inventory at levels it hasn't been seen since honestly like 2007, 2008. It's pretty remarkable out there. All right. Lyft is another one, guys. Lyft coming out with earnings that did not meet Wall Street expectations. This stock is getting crushed, trading at around $9.40. If we go to the daily chart, where would our level be? And the answer is pretty standard here. You have a gap fill at 920 right here, and then a double bottom at around 885. I don't like the gap fill because we already tested that in the pre-market. So what I'm going to do is I'm going to put a line right in here at $9, right through here, and right through that low, 890-ish, give or take. That's my first level. If Lyft gets through there, my secondary technical level is going to be 790. All right, so these are my two levels on Lyft that I'm watching. All right, so that basically takes care of earnings from yesterday after hours. Now we go to this morning, and there is a bright spot, Shopify. All right, so Shopify is having a big surge on earnings. Take a look at this. After closing yesterday at about the 54 level, it's trading near 64. In terms of a shortable level, there's really only one that I see here that would be an option for today. It's right at the 70 even number. So if this continues up and really has a short squeeze of sorts, 70 even number, this is a gap fill. This is a gap fill right here. That would be a major level. We could even extend this line out, and you can see it goes right into this zone right here as well. So that'll be first resistance. Now, I could mention this one here at 76 to 77. There's another big gap that needs to be filled. But I'd be very surprised if it happens. But if it does, yeah, 76 to 77 would be huge, huge resistance. All right, other stocks reporting. Disney reporting this morning. Disney initially getting a bid on earnings, then pulling back and going lower. It's not down that much, so it makes it very tricky to day trade this when it's not down a lot. We closed at 90 yesterday. We're trading at 87 today. If we flip over to the chart, look at the downtrend this thing's been in. Pretty remarkable downtrend. Now, I do have a level. It's a little bit more aggressive because the stock is not down a lot. So this would be a level, $84.75. There's a gap fill there. There's another level at 83.25. So these would be two levels to watch, again, that we can monitor. Okay. All right. So that's good to know there on the chart price action. We talked about Lyft. Actually, I already went over. That was this morning, so I apologize for that mistake there, but that was already this morning. CVS reported, Novo Nordisk reported. Neither one of them are exceedingly interesting to me. All right, so what we're going to do now, folks, is we're going to get right into it. No commercial break. I'm just going to go right through. Believe it or not, I'm fighting some sort of flu-y thing anyways. You can see I'm not dressed in my normal my normal attire here. Horrible night, by the way, but nonetheless, a little Dayquil gets me right into the game plan, and I can crush it for you guys. So let's go right back into the charts. I got to talk about natural gas. Natural gas breaking out. Here's your 786 retrace. Look at that from your fib here to your high here. So your start on your fib is here, your high here, 786 retrace. Look at all this sideways consolidation in here. That tells me there's a ton of support. Goes right there. And then look at this bounce. Now you can see this little down sloping trend line. If you go to your hourly chart, I'll show you why that was important. That was a little interim resistance that if we could get above, it would be a short-term breakout. So here you take these highs going back to the 22nd of July through these highs, July 31st, August 1st, and then yesterday we came right up underneath this. And look, overnight into today, we broke out. We are now back to $2.15. Now, where's your target? That basically 225. What you're looking at now that you broke out on the daily chart, you're looking for this area right here. This high pivot will be your next big resistance level. But beautiful move, guys. I know if you're in smart money stocks and ETFs, we have Boyle. Boyle is in the money now, about 10% for us. So beautiful little, ETF, triple ETF on nat gas. I think it's double, actually, double ETF on natural gas. Let's go to Bitcoin real quick here. Bitcoin continuing to get a bounce. I do have my upside resistance level already in the chart right here, right around 60,000. This is going to be a big resistance. If I zoom out, notice here, upsloping trend line, that's that line, and then this flat bottom area right through here, here, that's going to be a joining level of resistance. So now, does it mean that Bitcoin can't get through this level? No, it could, but you have to, as a trader or investor, expect it to struggle there a little bit. Okay, so again, it could struggle and consolidate and make a bull flag and then break out. That's always a possibility. But as a trader, you can't assume that. Never assume in trading and investing. Go by what the chart is telling you. Something that's resistance is resistance until it's broken. Something that's support is support until it's broken. All right. So again, Bitcoin, beautiful bounce here to the upside. I did close out my Solana long today. I just want to show you guys, this was a little interim level. We banked about, I think about 16% on this trade, buying it right down in this range right here. Again, major technical support and bouncing right back into that level there. Now, again, same thing with Solana. Could it go higher? Yeah, it absolutely could, but I can't assume that. And especially on a 16% profit in smart money crypto, got to take that money and run. I say thank you very much on that one. All right. Next up, let's take a look quickly at the chart of gold. Gold not doing a whole lot today. Gold is just holding steady, a little bit of a bounce, still stuck within this bigger channel. If the channel breaks, that's the only thing in the short term that would be bearish. Right now, as long as you're in this channel, you remain neutral to bullish. You might touch this. As long as, again, it touches it and doesn't break, it can bounce back to the high end. If this breaks, though, you should assume that we go down to about 2190. On the upside, if we break above this, which is at 2500, you would then have to go to the drawing board and find out, well, where's your next resistance? I have it around 2700. But again, I'll go into the details on how I arrived at that in a future game plan. Silver today, flattish to basically flattish to positive. I would still continue to think that the silver chart is going to retrace down here. Here's your inverse head and shoulders. Excuse me. We have the breakout, the move to 3250, the retrace to the scene of the crime, which is around, again, 2540, 2530, somewhere in this vicinity here. That should be major support. You also have an upsloping trend line that's slowly coming up closer and closer to that area. So this area, again, in here, massive support. I personally think it will at least touch that 2540, 2530 level. I don't know if it'll go lower than that, but I certainly think that the retrace to the scene of the crime would make a lot of sense on the chart of silver. All right, looking at oil real quick here, guys. Oil is getting a bounce today. Nice bounce, trying to recapture this little channel or this wedge pattern trend line. The key for oil, guys, why is oil bouncing today? Well, basically the mere fact that the Bank of Japan said that they were going to stop raising rates here in the near term, that means that you go from a trajectory of a global potential recession in a month to now being pushed off, where the market can kind of say, wait a minute, so we don't have to price oil in as if we're heading into a recession in a month because of all the turmoil going on with the Nikkei, with the Japanese economy, with the US economy, and all the repercussions that we've been seeing. And instead, we can say, okay, oil should be back up a little bit because we're not heading there due to the Bank of Japan and what they said. So little things like that, really, really important. And you can see the bounce today. Do I think it lasts? No, I don't. The macro, again, is very bearish overall. Whether we bounce back to 77 or 78, who knows on oil, but eventually the macro should dictate, honestly, 50s, $50 a barrel, maybe even lower, depending on how bad the recession gets. All right, guys, overall, thank you so much. I'm going to get to the trading room at the Apex Live Day Trading Room. We're going to get ready to trade some of these charts that I just was going over today with you guys. Thank you so much for tuning in, guys. Much appreciate all the kind words you guys spread. Let's keep the vibe positive. It's all about the positive mindset, the discipline, the charts, the data. That's what verified investing is all about. Have a good one, guys. Take care.